Well, Publius, this is, I know you've spoke with Mark before, but this is our, I think a good opportunity for us to have a cool conversation here. And I think that Mark is certainly one of the more educated people. He was just giving us a really good explanation of the DAO hack in Ethereum's history. So, I'm really just here to, put this together. I really want the two minds here to to have a good conversation.
Yeah, well, thank you for inviting me. I mean, I didn't know you guys. I mean, 3 weeks ago, I hadn't really encountered Beans yet. So it's kind of funny that suddenly now I'm on stage with you guys. So so hello and thank you.
It's a roller coaster for all of us, Mark.
Yeah, and I said this before you got on, but look, I feel for you. I've been an entrepreneur over the last 30 years on many occasions, and there's always some version of this disaster that happens to every company. Some of them never get known. Some of them are never public. Some of them are exceedingly public and far worse than this, right? So, and to the founders, the amount of stress that you feel is just insane. And a lot of people that have never dared to step out on the cliff themselves don't really understand just how stressful this can be. So I applaud you guys for, shouldering forward, doxing yourselves, and also knuckling down and figuring out a way forward. I really super applaud your courage on all those fronts.
Well, I appreciate that tremendously. We appreciate that tremendously. I mean, from my perspective, the thing that was just such an eye-opener was the response from the community. After what happened on Sunday morning, frankly, I thought we were dead, really, hard to imagine coming back from a set. How much of your money did you lose? It's like, well, we collectively as a DAO lost 100% of our money. It's like, that's as bad as it gets, So how do you recover from that? But over the course of Sunday and even into Monday, over 24 of the people that were working on Beanstalk prior to the attack reached out to us and basically said, hey, we're not going anywhere. We intend to keep working on Beanstalk, and we hope you guys do too. And, I mean, if that's not – I mean, it was really quite the humbling experience having so many of the people we've been working together with over the past 9 months, who now most of them have been paid, right? Beanstalk Farms has people that are paid. Most of them now are not able to get paid. A lot of them have quit their normal jobs and are working on Beanstalk, and their attitude is we're not going anywhere. This is worth fighting for. And just have felt so inspired, and so appreciate the kind words. But from our perspective, we've really been inspired by our community and hoping just to do our part in getting Beanstalk back up and running.
Yeah, I mean, I think the way I look at things like this, and frankly, I looked at when the whole Wonderland and MIM thing went down, and MIM completely depegged didn't completely depeg. It depegged a little bit for a while, and then it came back to its peg after Do Kwon removed 100% of his UST MIM liquidity from Curve. In my mind, that actually, in retrospect now, that was a massive stress test, which MIM survived. And so it's a positive. And what we now know about you guys first of all, we know your names, right? So we know there's real humans behind it. We didn't know that before, right? We just didn't know who you were. So that it's a positive now that we know who you are. And we also now know that you don't buckle under stress. You don't give up. And that's new information. So that makes, you've survived your own stress test. We don't know yet whether the protocol is coming back. We know that you're doing everything you can to bring it back. So we're not quite there yet, but we know a lot more than we did, back when there was nothing and you first started. So some questions have been answered that were never answered before.
Well, that's a glass half full approach. And from our perspective, there's a lot to be proven. The protocol has a lot to prove. And in the same way that being at 24 cents was a major opportunity for Beanstalk to prove itself, and in the same way that being at 1,600% debt level was a major opportunity for Beanstalk to prove itself, why not a $76 million hole be a great opportunity for Beanstalk to prove itself. So, yeah, the glass half full attitude can go really far here.
Okay, so where do you guys want to? Do you guys want to repeat things for that were gone over in the town hall at all to sort of summarize for everyone who's new, kind of what happened and where we are and what the plan is going forward, or do you just want to jump into other stuff?
We'll do whatever you want to do, Mark. This is your space as far as I'm concerned, and if you just if you have questions for us or you wanted to just chat about whatever, we'll ride this roller coaster with you.
Okay, well, I'm going to assume most people know what happened. They know there was a hack. They know how much was drained. They know that there's a plan to come back to life. Let's do this. Why don't you describe briefly, keeping in mind most people probably know this already, what the plan to come back is.
So, the thought, there's been a ton of discussion within the community and lots of tweaks and stuff being made. It's kind of amazing all the great ideas that everyone's been able to put forward and synthesize together. In effect, there's two parts, really three parts to the reset. The second part is the meat around which things are easy to understand, I would think, which is effectively leveraging the credit mechanism of the protocol to attract as much of the $76 million via debt or lending as possible. So over the course of, the thought is 3 days or so, Beanstalk is going to try to auction off 76 million soil, or up to 76 million soil. And the weather is going to start at 20% or so and increase 1% every 10 minutes for 3 days. And the thought is that will facilitate something similar to the normal weather mechanism and demand for soil mechanism, but obviously much simpler and expedited given the circumstances. Now, go ahead.
Let me just explain this, because I think this is, I now understood what you said, but I think for a lot of people it's still possibly confusing. So when you say, so basically the Bean protocol has within it, the Bean protocol basically has two things that it needs to do. One is if Bean is above the peg, if it's worth more than more than $1, it has to hand out more Bean to bring the peg back down to $1, right? If there's more Bean floating around out there, now Bean is worth less, right? So that's when you hand out the candy. That's where you reward people who have helped the protocol in some way. The other thing it's got to do is if the peg is starting to float below $1, is it has to incentivize people to give you their Bean. So that removes Bean from circulation and makes the Bean that's out there more valuable via supply and demand. So the way you do that is through this pod mechanism where you basically say, give us your Bean. The weather is kind of, the rate at which you'll be paid, the bonus, what you'll get for, putting your Bean in a pod. So when I was doing it, when I towards the end of, right before the hack, the rate was something like 60-1 payback. The weather was 6,000% in your parlance. And so, which is pretty awesome, but there was no soil. So, it was above at the time, Bean was floating above the peg. So therefore you did not allow people to purchase pods. Now, when you purchase these pods, the rate at which you're going to be paid back, 60-1 or whatever it is, but you don't know when that's going to happen. And that's the pod line. You know where you are in the line. And it's basically when the system was hacked, it was worth about 110 million, I think. And the pod line itself was about 600 million long. So because you were paying out to both silo holders and pod holders, it was roughly double that. So I wouldn't get paid out. So if I bought some pods at that moment when the protocol was worth 110 million, I would not be paid out 60-1 until the protocol was worth roughly 1.2 billion, something like that. And then my payout would come out. So if the protocol grew really fast, I would be paid out very quickly, maybe 3 or 4 months, or it might have taken a year or something like that. But it wasn't unreasonable at the rate at which it was growing that it would be sometime within a year. Did I summarize that correctly?
It's quite impressive, Mark, to hear you state it so eloquently.
I'm glad I understood it. I'm glad I wasn't sitting here saying something that was completely wrong. So thank you. Very kind of you.
Yeah. So the maybe just to continue, the idea for this fundraiser is to have a new pod line, right? Where it's unclear, particularly given the fact that all of the liabilities in the system are at this point really liabilities, right? There was all this BDV in the silo, bean denominated value in the silo that was stolen in non-beanstalk assets. And now you have all these pods and all this stock and all this beans that are kind of worthless. And so the question is, how can you attract some sort of bailout in a way that leverages the core mechanism of the protocol without, totally restarting Beanstalk, maintaining some of its liabilities and obligations, but potentially not all of them, such that there's a path forward, if that makes sense.
Yep, it does.
And so when we think about how to incentivize that, the thought is to have this new pod line where, whereas before, as you were saying, you have to get in the back of the $600-700 million line, and it's unclear how long. Maybe it'll take a year for you to get paid back, even though you lock in this 58x. But because of the nature of trying to get in a large amount of capital in a short period of time, the thought is to create a new pod line where you're now at zero in line going forward until this new pod line is paid back. All new bean mints will go 1/3, 1/3, 1/3 to the new pod line, the old pod line, and stockholders. So a slight deviation from the old minting schedule, but not that far of a deviation. And the bidding, the auction will start at 20%. So someone can get in the front of the line for 20%. And then the weather will increase 1% every 10 minutes for 3 days, up to 400+% or so. And the thought is over those couple of days, and again, there will in theory be this bidding process beforehand, Beanstalk will hopefully be able to reacquire a lot of the capital that was lost.
Yeah, so just to be sure I'm clear on this. So new pod line starts up like day one. It starts at 20%, but I'm first in line to get paid out. So if I show up with $100 within like a couple blocks, now I got $120. That's correct, right?
In theory. Now, it wouldn't be a couple blocks per se, because there will be some time between the auction or the sowing period and when Beanstalk is restarted. So the 3 periods are the bidding period, the sowing period, and then finally the restart. But in short, between whenever the restart happens, if you're at the first in line, you would expect it to be a very short period of time before you're paid back.
Understood. It's not block, it's epochs in your system, seasons by your parlance. Yeah.
Beanstalk to be restarted, but yes.
Yep, got it. Okay, that makes sense. And then up it goes until, so basically people can bid on, they can just wait and see. Yeah, so it is an auction. It's just another auction. So that's super interesting. It's interesting that you have a mechanism already built in to boot this back up again. And now when people get in the pod line, you're going to have them pay with Ethereum, right? Like that's basically the coin of the realm. I guess that's the only way in.
Well, we were thinking it might be USDC or Recurve or some sort of stable coin.
Oh, really? So you're going to go with stable coins and not Ethereum this time around?
Well, because there will be time between when the funds Beanstalk is able to raise the funds and when the thing is restarted, and we don't want ETH volatility to change the value.
That makes sense. Okay, so it'll be a stable. So you'll do this. So it'll be a stable pool.
ETH volatility.
It totally makes sense
in the stable. So yeah.
So I assume you'll do it on Curve, not Uniswap V2, right?
Correct. That is the other thought.
Got it. That makes sense. Right, maximum stability. Okay, I think we're all feeling the need for maximum stability right now. So I think that's a good decision.
There's also a lot of complexity associated with doing multiple pools at launch, right? You have this pool that was just raised by Beanstalk. It's much easier to deploy it into a single pool than to do multiple pools and to figure out what distribution. So the thought is start with a single pool.
Yeah, agreed. So basically, if you were in the old pod line, because you basically had 4, Oh no, I'm sorry. I'm mixing up silos. Let's talk about the silo now because this is a bit confusing to me. If I am so when you reboot this whole thing back up, the silo will once again be summoned into existence in the state it was in before the hack, right? So if I had 100 beans in a silo, when this thing comes back to life, now I got 100 beans in the silo again, right?
Assuming that 100% of the fundraiser is filled.
Oh, okay, right. So so it's based on the percentage.
Correct. If 50% of the fundraiser is filled, then you'd have 50 beans.
Okay, and by fundraise you mean the new pod line.
The barn raiser, whatever you want to call it, the 76 million soil event.
Right. Okay. So how will I know when? Okay. So how will I know when the new? Let me ask you this way. So I'm assuming by that you mean the new pod line, right? There is no other way in which you're raising money.
Correct. So there will be this event, right, where there's 76 million soil. There will be the bidding period for a week in theory. Then there will be this 3-day period where the auction actually happens, where the weather starts to climb from 20%. At the end of that 3-day period, there will be some amount of soil left. It may be 0. It may be 75 million, right? So whatever percentage is remaining, that will effectively be the haircut that everybody receives. So if there was a 30% remaining, everyone will take 30% haircut.
Okay. Got it. So my $100 will now be $70 in the silo, should that happen the way you just described.
Correct. And so whether it was beans or LP tokens and stock, obviously, associated with the beans or LP tokens, or not if you just had circulating beans, let's call it, or farmable beans where you just had one stock, everything will get scaled by whatever that percent is.
Got it.
That's the thought I think makes sense, such that all of the liabilities of Beanstalk will scale with however much money it's able to raise. So if Beanstalk is able to, in this dead event, raise all of the 76 million, no one needs to take a haircut. But if it's only able to raise 50%, then everyone takes a 50% haircut. The system is totally reset to the state it was before, except scaled back. And now, whenever it's restarted, it can effectively resume as before.
Yeah, that makes sense.
The governance will be off. There will be no on-chain governance for the time being.
Yeah, I'm getting there. We're not quite there yet, but yes, I'm going to go there because I do want to hear what the plan is there also. But yeah, no. So for those of you who don't know what the silo is, because I know we didn't really define it, I'm assuming most people here know. But the pods we've discussed at length. The silo is kind of the other option. If you are just a mere mortal user of the system and you don't want to mess around with pods, you just want to deposit your bean and get some sort of yield on it, kind of like Anchor, but the yields are a lot better. Then you put it in the silo, and the silo has a bunch of in my view, too complicated mechanisms for determining how much you get. But by and large, it's the sooner you put in, the more you get. The longer you leave it there, the more you get, and that's how the motivations are set up. So, and that will be probably how 90% of users interact with the system. When I was using it, it was saying that I was getting somewhere between 200% and 300% APY, depending on which liquidity pool I was in. There were 4 choices. But I was actually observing something like 1,200% when I sort of reverse calculated what I was actually seeing. But I was given to understand the system was in sort of an extreme growth spurt at that moment, and that was very unusual. So did I get all that right?
It's funny, right? There are so many different nooks and crannies and complexities, but you seem to have really started to figure your way out through the vast majority of them, Mark. I appreciate all of your explanations.
I'm glad I'm able to give them. And it's only because I've studied a lot of these different systems, right? So when I came to you, it was after I'd studied, obviously, Terra and Luna, but also Tomb on Phantom. And God, what else? MIM and a new thing called Deus, and there's like a bunch of these things. So I'd seen similar mechanisms before, and so when I was able to sort of sort through your nomenclature, I'm like, oh, okay, that's like this other thing, but with this twist, right? So that was kind of how I was approaching it. It definitely helps to have studied a bunch of these things.
Well, and a lot of them are all similar, but with a couple twists. And at the end of the day, the twists are what makes or breaks the model, or the models, we should say. And there's a lot of different ways to do them properly. But one of the cool things about the credit-based model, which is unique, at least currently, is the fact that when you have these deficiencies, you can, in a very natural way, in theory, raise it back without changing substantively the state of the protocol, if that makes sense. Like the debt is a substantial, sustainable way to acquire a significant amount of liquidity from the protocol's perspective. So it's very interesting to watch it play out in practice. Like if you had something closer to a Terra or a Luna system, you might expect something here where there's more of an OTC sale of Luna, right? A la what's happening to collateralize some of that system with Bitcoin. But in this case, the goal is to avoid some sort of OTC sale of stock by the DAO, because then there wouldn't be any BDV under the stock. And so, the systems are inverted in many ways, which have their own benefits, and think that Luna and Terra are particularly interesting and innovative in getting around the collateral problem. But, it's exciting to see how the credit-based model can be very complementary to that.
Yeah, I thought actually, in my mind, when I looked at your system, the thing that really grabbed me, like for me, the headline was you had reinvented the stablecoin methodology. The key insight to me was that when you do Terra and Luna, you have to burn Luna in order to make Terra. So which had the effect of reducing the supply of Luna to the point where Luna started going up like crazy, to the point where it's at $40 billion market cap right now, because Luna becomes more and more scarce as demand for Terra goes up, right? And Luna becomes more and more scarce and more valuable exponentially. You, instead of having a different coin, which was sort of the exponential growth coin, you said the stable coin itself is the exponential growth mechanism if it is in the staked state. So staked stablecoin is the value creation token. And so you sort of combine them into one thing. And that was pretty insightful. I really liked that a lot. That was the thing that really grabbed me.
Well, appreciate that tremendously. And think that at the end of the day, the fact that you have protocol native liquidity from Beans is the differentiating factor that makes there to be potentially product market fit that changes the structure of DeFi, where you have positive carry stable coins facilitating a variety of transactions that right now are obviously facilitated by negative carry stable coins. So that's the core innovation, if you will, from a utility perspective. But the caveat, and this is a big caveat from the perspective of the development that the community ultimately needs to perform going forward because of this, it's that, the positive carry only takes place if the beans are in the silo, right? And
Right.
So in practice, that means that the silo needs to be as flexible and really, I think flexible is the right word, but frictionless maybe as well, such that people don't necessarily need to leave the silo and can do whatever they want across DeFi, such that they can continue to earn all of their Beanstalk native yield and continue to use their beans. So that's where, and obviously it's on pause right now because of what happened, but a lot of the development that Beanstalk Farms was working on around generalized convert and generalized minting and the bean farm were all related to creating utility for the silo.
Right, because the purpose of the silo is to provide liquidity for Bean and another stable or Ethereum. Is that correct? Like from your internal mechanism standpoint, anyway.
I would say it's not to create utility for Ethereum or for other stable coins, but it's to create utility for Beans doing things like providing liquidity for liquidity pools and such.
Yeah, because as long as there's liquidity, as long as you can go to Uniswap and give basically exchange one bean for one Ethereum, $1 worth of Ethereum, then it's worth $1. Like as long as that's true, it is worth $1. right? And that's the point of the silo, at least in my mind.
Instead of collateral, if Beanstalk can attract enough liquidity in the form of other assets, such that, as you said, Mark, you can trade one bean for $1 of other assets. That's exactly right. That's how stability is achieved.
Yes. So that's pretty awesome. I really like that too. So, okay. So we basically suffered a hack in the governance system. Why is this never going to happen again in the new system when you boot it back up again?
Yeah, so never's a strong word, Mark. And I think this has been a lesson in humility for everybody in the community as to, what level of security it's reasonable to expect from on-chain governance at the moment. And so at a high level, the thought is, and even Vitalik weighed in on Twitter about this, on-chain governance is particularly difficult to implement via tokens. And so from our perspective, there's no rush to re-implement on-chain governance given what's happened. And the thought is to move to a community-run multi-sig and have there be off-chain governance for the foreseeable future until a much more robust and secure governance mechanism can be developed and audited, certainly at least once by Trail of Bits, hopefully, and potentially another audit firm as well before anything would ever go back to on-chain governance. So in summary, in the short term, the on-chain governance has already been removed. There's already a move taking place to a community-run multi-sig. So the attack vectors introduced by on-chain governance have already been entirely mitigated. And then it is worth noting that Beanstalk was audited, as recently as a couple weeks ago. And so we do feel like the vast majority of the contract is secure, both having been out in the wild for 9 months or almost 9 months and having been audited. The governance is where all of the attack vectors, or the vast majority of them, would have appeared to have been. So the fact that it's removed makes us feel a lot better about it. Now, at the end of the day, everyone does need to kind of come to a decision together, and the DAO needs to vote on whether it makes sense to relaunch Beanstalk once the barn raise is complete, once this fundraise is complete, or whether it makes sense to wait until the Trail of Bits audit, which is scheduled to start in early June, and so would be completed towards the end of June, to wait for that, basically. So there is something to be said for the community could make a decision, that it's worthwhile to just wait an extra month or a month and a half to wait until the protocol is audited by the gold standard for computer security firms before relaunching. And that's totally reasonable as well. Right.
Okay, so just to summarize, your answer is we ripped out the governance. We're not going to put it back in anytime soon, if ever, but we might. I did see Vitalik's comments. Vitalik was particularly negative on Coinbase governance completely. He was like, no delay, no amount of multi-chain can ever fix this. I don't know that I'm personally that negative on it, but without a doubt, having some sort of delay that can be human intercepted for governance, call it a week, and there's nothing so burning that it has to happen, in less than a week. I think, at the very least, that seems like a reasonable way to run it, if in fact you're going to put governance back in. But for the time being, no governance. It's just you guys and your multi-sigs, correct?
Well, not us. We're actually probably not going to be on the multi-sig or even have just one of like 9 or 11 keys or something. So we will not be the multi-sig, if that makes sense. It will be the community.
Got it. Okay, now, so hand the keys over. Understood.
One thing maybe to comment is that if you think about what governance looks like for Beanstalk at scale, right? And this was something that was ultimately going to have to evolve anyways, because the hope is to at some point figure out how to leverage the credit history of Beanstalk across multiple chains. And that's a very sophisticated problem to solve for a couple of different reasons. Primarily, if you're harvesting beans on one chain, but you have a universal pod line, the message that beans were harvested on one chain, if you're able to corrupt that message and say, hey, 1 trillion beans were harvested on this chain, that can fuck the whole system. So there's a lot of risk that comes with going to other chains and having some sort of cross-chain infrastructure. And once you have Beanstalk on multiple chains, coordinating governance and protocol updates across those chains also becomes very difficult to do and would require some sort of off-chain coordination anyways. So the point is, whatever governance looks like can be super robust, can be super decentralized and secure, but the amount that happens on-chain versus off-chain, that the goal is to figure out how to have a really robust and decentralized governance process without necessarily allowing for any sort of attack like this to ever happen again.
Right, and what you just described is effectively a bridge problem, which is the which is the other great hack of the last few weeks, the Ronin bridge. So we all know bridges, and Ethereum and Vitalik hates bridges as well. So,
well, because they're dangerous, right? For exactly this reason. And to that point, the thought was prior to the attack that 6 months or 12 months down the road, there would have to be work done on a Bean-specific bridge to communicate between the different Beanstalk, because at the end of the day, if Beanstalk is going to grow to trillions of dollars of size, it's very unlikely that any one bridge is going to be large enough to secure the protocol.
Right. Yeah, you're going to have to. Yeah, I do think that, I said I studied other systems. One of the things I thought was super cool about MIM was before its sort of semi-demise, they did have cross-chain MIM bridging with no fees and no slippage up and running, which made it extremely attractive as a stablecoin that could do something that no other stablecoin could do, at least to my knowledge. So I thought, that. So you do definitely want to somehow, I think, provide. I'm sure you know this. I'm sure I'm not telling you something you haven't seen yourself, but that seems to be very valuable.
Yeah, and there really is something to be said for the elegance of both the Oracle solution that is possible and the bridging solutions that are possible because of the fact that Terra has their own node system, right, or network of nodes. So a lot to be considered. One of the nice things of this, even though at the moment it is a total shit show, is that this does allow for like a grander reimagining of governance, and there's nothing wrong with that. So most people thought that the impossible problem or the much more difficult problem to solve was the economics problem, which Beanstalk has been doing a good job of demonstrating its efficacy of solving. And so the governance is, we're betting the over that the community can figure it out collectively.
Right. Yeah, no, agreed. So getting back to, I just want to go somewhere else for a second, because I've said this on Twitter before the hack, and sort of studying your system after I sort of figured out what all the knobs and buttons did, it seemed to me to be really complicated, right? You've mentioned, oh, we're really happy that you understood it, which means that a lot of times people don't understand it. And for it to have trillions of dollars worth of beans floating around out there, it has to somehow be ridiculously simple. And I would say that Terra and Luna, despite whatever's wrong with it, the value proposition is ridiculously simple. Put your, why do you want Terra? Well, so you can put it in Anchor, so you can get 20%, right? You definitely will get the 20%. You know that now. And so that creates demand for Terra. Like something like 75% of all Terras is staked in Anchor. So that's its primary use case. And that creates demand for Luna, right? And so the price of Luna goes up ridiculously. And, even though all these things are sort of ridiculous, they're also really simple. And I feel like being as, at least the way it was born, I love the insides of it, but I don't love the outsides of it. I feel like you, me, and our sort of Twitter friends that love DeFi will be into this, but it'll just stop growing at a certain point because normal people in the normal world can't understand it. What is your answer to that? Do you agree with me? Do you disagree with me? What do you think about that?
So I think this is a question of scale. There's a couple things. First, Rome wasn't built in a day, Marcus, I'm sure you know. And so to seed a strong decentralized community of DeFi people first, this has had the lingo and the memes have had a very strong effect. That doesn't mean that it will be easy for a billion users to understand the memes. However, I would push back and say that from our perspective, the nature of Beanstalk is so novel, and the structure of pods are so novel, and the structure of stalk is novel, such that all of the metaphor is really designed to make it easier, not harder to understand. Even if there is a veil that needs to be pierced, once you break that veil, we do think the metaphor is very helpful. Now, with that said, think A, the metaphor can be refined. B, there can be a lot of supplemental materials produced that don't include any of the metaphor. There needs to be manpower to do that, and Beanstalk Farms was growing such that at some point could have been possible, but now that might be a little bit on hold. I mean, in short, it's definitely complicated, but it's designed, the language that's been used to communicate how Beanstalk works is really designed to make it as simple as possible to understand. I know that it's a complicated system, so it's tough. But at the end of the day, the question is it fair to oversimplify, right? Is it reasonable or honest to oversimplify to make people feel like, oh yeah, I get it, but leave out some very important details? And at least from our perspective, as Publius, our role is much more to err on the side of including all of the information and all of the details. And then, if other people want to summarize, that's up to them. But, we don't want to leave out any relevant information when we're talking about Beanstalk.
Yeah, I agree with your basic tenet to be transparent and to allow all of us who do understand this sort of thing to see all the cogs and wheels and be like, oh, so that's how. Oh, okay, now I get how that works. And I was able to piece a lot of it together. I still don't totally understand why, and I'm just going to ask this now because I have you in front of me. So when I was puzzling through it, I do understand that when you put bean into the silo, you earn seed, and then the seeds produce stalk. And the more seeds you have, the more stalk accrues over time. And I guess it was just sort of I didn't say why seed and stalk couldn't just be one thing, but maybe one encapsulates time and the other one encapsulates the amount of bean you put in. I guess that's why. But it just sort of seemed like, why am I getting these two things? Does that make sense?
So the long and the short of it is, originally the main question was just how to create this opportunity cost that is created from the stalk that grows from seeds that need to be forfeited when you withdraw. Now, the original idea for seeds was conceived as an accounting tool first, such that it was an easy way to account for users' deposits. But, and this is no longer the case, or at least we don't think this is any longer the case, the original idea after the accounting idea was conceived was that you could have stalk and seeds become liquid, and then you had this very nice interplay between people trading stalk and seeds as some sort of expectation of when bean seigniorage was going to take place, if that makes sense. So even though now we don't necessarily think it makes sense for seeds to be liquid, that's where the original idea came from. Now, going forward, as Beanstalk migrates to some sort of gauge system in theory, one might expect the seeds to be obfuscated, but probably not.
Okay, that makes more sense. Yeah, I do. Look, I do like having a version of this where I can see inside the engine. There are a lot of people who love to buy a car, open up the engine, and see how everything works. And you want that to be you want the hood to be able to pop open, and you want the engine you want there to be a manual, and you want to be an engine that's understandable for those people, which is us people. But the vast majority of people, they just want to drive the car, right? And to get mass adoption, that's kind of, at some point, that'll just have to be something you guys provide. But sounds like you guys know that.
And there's a whole team at Beanstalk Farms working on the brand and how to better explain this to people than we can.
Yep, makes sense. Well, I don't think I have any more questions on my end, so I guess I'm done.
Say it ain't so, Mark. Say it ain't so.
Yeah, well, I'm sort of question exhausted, I guess. So do you guys want to take some questions from the audience?
I had one question for you, Mark, before I didn't get a chance to ask. Where did you come across Beanstalk? How did you find it?
Um, Let me think. I think probably Twitter. Twitter is sort of where I spend. I try not to spend time in Telegram. I'm forced there sometimes because it's just so chaotic.
Sure.
But in Twitter is sort of, I've been doing it for longer. I have a stronger presence there, and I'm following a lot of interesting people there. So I can tend to sort through new information faster. So I'm pretty sure I saw some people tweeting about it. And usually when I see something sort of float past me 3 times, I say, wow, that might be a thing. I should probably go have a look at that. And I probably saw it 4 or 5 times in one sitting. I was like, all right, I need to have a look at this. So
Yeah,
probably
that's kind of my approach too. I I think probably a lot of people here. Hey, I just brought on Ryan for a question. Ryan is one of our core team.
Hey, Mark. First of all, thanks for doing this. I mean, this was fantastic. I really enjoyed the conversation. Publius, thank you as always. So not so much a question, but Mark, to your point about like this scaling question and going from this core team of, folks that are really, really into DeFi and really want to look under the proverbial hood. What goes through my mind is, what will, right now we've got, let's say we've got 2,000 users or whatever that are that core DeFi. As we move outward and that number of users increases, I think we'll move away from the crowd that might be looking at this as an investment tool more towards the crowd that's looking at it from more of a pure utility standpoint. So, a lot of the discussions we've had around like negative versus positive carry and the utility of the coin are around the idea that, hey, I can actually use a bean to do a thing and it will work effectively. And I almost think that as the protocol continues to grow, we're going to see more and more people that are saying, hey, I'm not looking at this to make a ton of money. I want to bet on a football game, and I'm going to be able to use Bean to do that on Augur or whatever. And see more and more utility opportunities. I think that's where part of that scaling is going to happen.
Yeah, no, I mean, look, it's we all know that there's utility for $1, right? It's just a question of where it's accepted. So, I guess it's just building up a bunch of places where your stable coin is accepted. People use, Tether is sort of the most accepted stablecoin on Binance and exchanges around the world, right? A lot of them just operate on Tether only. So it's got utility as a dollar in those settings. And the more sort of places you guys can find for there to be utility for Bean, or it's recomposed with other protocols and things, the better. So, although weirdly, Luna and Terra have gotten away with being a one-trick pony, right? You don't really, UST really has one trick, and that's to make you 20% a year. It's on a blockchain that only has 17 other protocols, right? Which is very unlike Phantom or Avalanche or even Ethereum that have hundreds of different protocols with which things can be recomposed with one another. So weirdly, Luna has escaped with, tell me if you disagree, but it looks to me like Luna has escaped without a terribly large amount of utility.
Yeah, I think that's fair. And, I want to give to that point, I want to give a quick shout out to the Bean Sprout crew and really a number of other folks that are core contributors that are working on that exact question of like, how do we increase utility? Is it through partnering with other protocols? Is it through working on things like NFT marketplaces where, Bean can be used? Like all these ideas are floating around to do exactly that, to build that utility.
Yeah, agreed. Totally agree with that.
Well, and from our perspective, the negative carry costs, they're pervading all across DeFi. And it's unclear all of the nooks and crannies that having negative carry costs affect at the moment. And the switch to positive carry costs could really present a fundamental shift in the structure of the landscape of DeFi. And don't think we're overstating it there.
Yeah, let me also bring one last thing up that's also been sort of on my mind. I understand why the silo is providing me with 200 to 300% APY. I get it. I believe it. It's working. The mechanism is beautiful. From a consumer's point of view, it sounds like bullshit, right? You see something that says 200, 300% APY, you just go, well, that can't be real. And I think that, Luna's, our US, I hate to go back to it every time, but, 20%, even that seems somewhat miraculous, but it's at least swallowable. And I do worry that, sort of getting consumer adoption, because they just don't believe that 200 to 300% is real. They just won't invest in it because they're like, oh, this has got to be a scam. They're going to take my money at some point down the road. I think that's a real thing also, even though it's terrible, right? Because you're taking money away from the consumer that they could have. But I just feel like most people won't believe it. So do with that what you will. But that's sort of my 2 cents on that.
Well, and the too good to be true aspect of it is fair. And I think it's reasonable for people to be skeptical. And it's unfortunate that given the attack, people may be even more skeptical, although it's always healthy to be skeptical. But we'll just say Beanstalk is one of the very few systems, in our opinion, that are designed to be as fair to everyone as humanly possible, and not to make us, the founders, or anyone, the earliest adopters, just make us rich. It's designed to make any of the participants able to participate in the general success of the protocol in a very equitable fashion. And think that that's one of the key differentiators between the protocol, and in practice is probably one of the reasons why there are so many people that now, even with what's going on, are not ready to let the protocol die, because they feel like they own, they're owners and it's their protocol, and it's very reasonable to feel that way.
Yeah, that's actually a great point. You're making it, but a lot of people may not realize this. Unlike Terra and Luna, when they booted up, or even Frax, right? When you booted up Frax for the very first time, Sam could, and I think he did, mint a whole bunch of FXS, for himself and the team. And, same thing is true of Luna. When they booted that up, whatever percentage of it went to Doe and his team. You guys didn't do that because you couldn't do that, because the protocol is designed to only create.
Well, we could have done it. We elected not to.
Yeah, you could have designed it. Yeah, fair enough. So
when the protocol launched, when it deployed, we could have said, send 100 beans to this wallet and 100 beans to that wallet and 100 beans to this wallet and 10,000 beans to that wallet. But we elected to have the system run totally clean. And just like everybody else, the only way we were able to get exposure to the protocol was by buying and participating, like truly just like everybody else. So felt like from a first principles perspective, that was a great way to show, there is no first class. There is no first class or anything like that in Beanstalk, and everyone is equal. And that's something, we're very proud of.
Agreed. I saw that, and it was the fairest of fair launches. Totally agree with that, and I applaud you for it. So,
I wanted to bring up Ceazor. For Ceazor, do you have a question?
Yeah. I have a question at the end, but I also have some statements to make on some of the things Mark has said. First of all, I've been studying Beanstalk for quite some time now, so it's almost the genesis, quite a long time. And you are right that the UX is a puzzle, right? It takes quite a bit to, I still click on things, I still read little pop-up descriptions, and I'm like, what does this exactly mean? And then I start thinking about it. But I think this problem could be solved with a light version, just a switch to light, and just have silo, and that's pretty much it. Just swap and silo. Some sort of light version might solve that. And to speak on the problem of people can't swallow 230% or actual 1000%, because the APR was historical. It wasn't up to date. It was based on past, right? And that's basically the way most APRs are. However, when I first got into it, it was 0%, and then it went to 30, and then it went to 60, and then it went to 230. And I think the last time I saw it was 360 or something. Now that's because it was in heavy growth phase and the peg was quite high. But if once it stabilizes and goes to super high, then I don't think it would be printing at such a high rate unless there's more and more and more demand coming in, right? And, that would be up to the team to try to find use cases so that demand can keep growing, right? Now, the question I do have for Publius is you always use the word positive carry, and I haven't actually got a nice good definition of this. Is this just mean yield bearing? Like, is it just interest bearing or yield bearing? Like, what exactly can you define positive carry for us?
Carrying costs are just, you know, what it costs to hold a position. And the idea is that if you're holding a bean position, there's some sort of positive yield associated with that.
Okay, so yeah, so basically it's another way to call it like interest bearing in a sense, right?
Correct.
Okay, that's it.
And, you know, it is really amazing, just to hop onto that, Ceazor, all of the different things that are created from that positive carry. If you look at something like Anchor and having a fixed yield protocol, beans are also very suitable for something like that, where you can imagine a protocol, and there was chatter before the attack. Hopefully this protocol will continue to be built, called Root, that was going to offer a similar fixed yield product on bean deposits. But because beans have positive carry, it's actually a very unique relationship that Root is facilitating, where people who are taking the other side of that trade are really just betting that the yield from the silo is going to exceed whatever the fixed rate is, if that makes sense. And it's incredibly capital efficient because let's say you want to guarantee for a year a 25% return on 100,000 beans. In order to guarantee that for a year, you only need to lock up 25,000 additional beans. So somebody can, in a super capital efficient way, take some sort of call option on or a future on the yield for the silo over that period of time. So lots of really interesting derivatives and other stuff that can, in theory, be built on top of a positive carry stablecoin, and really hope that this is just the beginning.
That is super interesting. So guaranteed 25% yield for one party, and then the other party is just whatever's left over of the yield I get, or for whatever reason that yield doesn't materialize, then the party that's getting the 25%, it comes out of what I put up on my side of the bet. I've seen things like this before. They work really well. That's super interesting. That would solve the problem of the user interface for the average.
How about that? How about that?
That would work.
The grandma and grandpa.
Yeah, there's actually quite a few protocols that offer the same system of like fixed yield versus speculating on future yield. Like I've done quite a few researches on several of them, and they tend to follow the same type of pattern of like two token ideas, where one person gets the fixed yield and the other person basically guarantees that fixed yield while getting the possibility of even more yield.
Mark, we've also discussed before the possibility of having two different interfaces. So one for a little bit more of like the power user that explains everything, and the other one, you know, just having a more basic kind of savings account that you could do.
Yeah, absolutely. That would be very, very helpful for your growth. I think for sure. The AOL simple to, you know, you guys are probably a little young for that, but you know what I mean.
Well, beanstalks are primitive, Mark. You can only make it so simple. But at the end of the day, the hope is all sorts of tech is going to be built on top of Beanstalk that makes it accessible to a whole variety of different audiences.
Yep, completely concur. This root thing's a great idea for sure.
Okay, I'm bringing up Toji.eth, who's been very patient.
Thank you so much. I'm in the gym now, so if you hear machines going, I'm so sorry. I'm going to try and be as brief as I can. First of all, thank you for bringing me up. Thank you to the Bean team. You guys have been weathering the storm very well. And it's really cool to be in the same space as Ceazor. Great guy. Love all your videos. My main question that I wanted to bring up is I'm a degen at heart, and I believe in beans as a whole. I see it as a great opportunity to buy bean right now at 0.3 because I believe it will get back to 1. Is that the goal, to get the peg back to $1, or are we relaunching with a different coin?
So, because of the level of the corruption of the Bean token from the attack, there's going to need to be a new Bean token issued by Beanstalk. So in short, the current Bean token is dead, even if Beanstalk is very much alive.
Gotcha. That's interesting. So how does that work for current bean holders, the people that never let go?
Well, they will get. The idea is that Beanstalk should honor all the state of Beanstalk prior to the attack, effectively, with a haircut.
Interesting. And then my last question, not necessarily on my DGen side, I'd like to know, how did you guys fund this? And as a potential dev myself and wanting to be a dev, how did you guys? As I've read, no VCs, no shoots. How did you guys get it?
What's there to fund? What do you like? What's there? There are no costs. What did it cost to deploy Beanstalk on mainnet? Like $4,000? I don't know. That's the cost.
Interesting. And you say you guys would you say you're how do I say that? Would you say you're a full-time team most of the time or a part-time team? Or
we spent like 9 months with almost all of our effort to working on Beanstalk prior to launching it.
That's interesting as hell. I love it. Well, thank you for bringing me up. That's all my questions. Thank you so much.
Thanks, man.
I think Toji forgot to ask his last question, which is, what's a DGen like him to do for a relaunch?
Exactly. Yes, he took the words out of my mouth.
So the thought is, I think Beanstalk Farms is preparing lots of information about the plan that's being put together, and there will be more information for the DGen and you to read about how to participate in the auction and the bidding process and or the sowing process prior to the restart. Boom, boom, boom.
I love it. You guys are amazing.
Thank you, sir. It takes a village.
Okay, we got T-Bic.
Hey, what's up, everyone? So my questions have kind of like indirectly been answered because Mark was kind of
T-Bic is more. Oh no!
Yeah, no. I came up with a new one. Don't worry. But yeah, it was kind of when Mark was talking about the complexity of Beanstalk and kind of the model of how current users are interacting with it. And since that point in the conversation, you guys have done a really good job of highlighting. Right now, we're building Bean and Beanstalk, but then we're going to start focusing on building on top of Beanstalk and layering these new types of simpler abstractions and user interfaces on top of the core protocol itself in order to make it accessible and to scale this thing out. Kind of in line with that theme, this question is directed at Publius. What utility-focused aspect of the roadmap are you most excited about moving forward? It's kind of an optimistic question after we revive this thing.
So to me, I thought that the generalized bean farm, or as we were starting to call it, the farm, and we were so close, even the white paper was being drafted for it, was something that was really going to be revolutionary in DeFi and hopefully still will be. Such that if we had this LUSD pool live, and let's say it was even whitelisted on the curve gauge, which at this point does sound like a little bit of a fairy tale. It's certainly a long way into the future. Hopefully it'll happen again soon, but it was a lot closer a few days ago. The idea is that people could, in a single transaction, take their harvestable beans, sell them into ETH, deposit that ETH in a liquidity trove, mint LUSD against that liquidity trove, add that LUSD to an LUSD bean pool, deposit the LP tokens for that LUSD bean pool in Convex for CVX LUSD bean, and deposit that CVX LUSD bean in the silo, all in a single transaction. And to me, that's pretty fucking cool. If you consider how the normal flow in DeFi is, that would take 7, 8, 9, 10 transactions with approval and stuff. That's a really dramatic change in the UX across DeFi.
Can you even imagine the yields on that token? No, that's fantastic. Well, thanks for answering the question.
That is super cool. I agree.
The tech is cool as fuck, guys. It's just a shame that there's been this slight hiccup. But I think in the long run, Beanstalk and all of us will be much better for it, because what doesn't kill you makes you stronger. And Beanstalk does not appear to be dead. By the 100+ people in this chat, by the hundreds of people in the calls over the previous couple days, by the amount of endless dialogue in the Discord and stuff over the past couple days, certainly not dead yet.
The rumors of our death are greatly exaggerated. Okay, Jack, you're next.
Hey, thanks for having me on. I actually think all this is super, super bullish for Bean. I did a bunch of research about 3 months ago, waited. April 16th, I put in 41,000. And of course, this happened, but I'm still super bullish on Bean. As part of the research, I went into all your articles and documents and everything else. This is now also part of the public record. And I've learned more about Bean in the past 3 days because of this exploit and everything that's going on. If I find some more money, I'll be putting some more money in. So good on you guys. It's awesome.
Well, appreciate those kind words tremendously, Jack. And we've always tried, even when we were anonymous, to be as open and honest as humanly possible. And that certainly hasn't changed. So very excited about the additional eyes and ears looking at Beanstalk and hoping to make the most of this opportunity.
You're on track, doing good.
Toji, I see you requested again, and I just thought I'd bring you back on if you had a question you forgot. Or maybe not. That's okay. It's okay. Okay, we got Adam coming on.
Hey guys, I want to ask a really oversimplifying question, and hopefully the theoretical clears people's minds. Let's say in theory I had $100 in Bean, whatever, a week before the exploit, and then in the bidding process, I put an independent $100 in. Let's say it's 2 people or 2 wallets. I'm curious, again, a theoretical, we throw a year out. What does that first wallet who lost the 100 look like? And what does that second wallet that invested the 100 from the rebuilding look like in comparison?
I mean, the short answer is, Adam, unfortunately, it's too simplified to give you a good answer, because it's dependent on what percentage of the $76 million Beanstalk is able to raise. And it's also dependent on what the growth in Bean seniorage is over the next year. So it's just very hard to speculate. It's also dependent on the yield you get for lending for the fundraiser.
Sure. I think the concept I'm missing is just, I mean, let's say, I don't know, there's a half haircut. I'm just wondering how the order gets paid out in the new investor wallet versus the leftover reconciliation of the individual who's burned.
Well, I think there's too many variables to speculate like in a concise fashion.
Can I try to answer it? Because I think I understand enough to answer it.
Please, Mark. Please,
and you can tell me if I'm wrong. But yeah,
no,
so let's just say they raised like half of the amount that they lost, right? So 50%. So the wallet that had $100 in it, when new Bean is issued, 50 Bean will magically appear now in that wallet. Did I get that right, Publius?
I'm with you. This is exactly the explanation I was hoping for.
Yes. So you'll, if the fundraiser is 50% completed, everyone gets a 50% haircut. That's exactly correct.
Yeah, or you get your 50% back, which is a better way to say it.
But a year later, it's so hard to say. A year later, it's
I get it. So it's hard to come out. It's hard coming out of your mouth right now. I understand. So yeah, so 50 new Bean will appear in the wallet that when it's reissued that previously held 100 old Bean.
Yep.
And then and then you have another wallet that's in the silo. Same thing. It'll basically be reinstituted with 50 Bean. But the cool thing is that if we get like the 200 to 300% APY kind of going and it grows fast, that could grow back to its full 100 Bean in not very much time if this thing works.
Totally with you. Yeah, I guess what I was missing is the fact of, is there priority to that older wallet both wallets have whatever 50 Bean now.
No.
Is there
there's no
priority between the two?
There is no priority between the two. Right?
You just get the like credit based on like whatever the fundraise was because you were in it before.
Right. So remember, they're raising. What really backs the coin right now is the amount of liquidity, right? So they just don't. They don't want a situation where, you know, if they gave you the full 100 back and they did that for everybody, now there's twice as much coin out there as there is liquidity. So if there's a run on the bank in that situation, you know, all the liquidity gets destroyed, and now we're right back to where we started from. So that's a bad idea, right? So that's what they're trying to protect against.
Okay, cool. Thanks, guys.
Alrighty, folks. I gotta hop in just a couple minutes, but this maybe we'll take one or two more questions if there are interest.
Sure thing. I just brought up Victor here. Victor, are you there?
Victor Scott. That's a good name.
Yeah. Good day, gentlemen. Can you hear me?
Yes.
How's it going?
Yeah, good, guys. Thank you for the efforts and the leadership shown so far regarding the exploit, and for the rolling communication you've had so far with the various platforms. I've got a couple of questions regarding. First of all, I just want you to give color with regards to has there any been venture capitalist or large large investors or high worth individuals to look at buying large stakes that have been approached? And then the other thing I want you to ask what are the special incentives that you have in the mind to attract large investment, high net worth individuals into looking at perhaps taking a stake in the Bean? And also, I want you to answer a question regarding is 3 days that you propose to attract capital long enough in view of the 76 million? Is 3 days not too short? Are you looking at perhaps a week or 2 weeks? What is the preparation to make sure that the fundraising is a success? Thank you.
So, a lot of this was already covered, so we'll keep it a little bit brief. But there hasn't been basically any significant VC investment into Beanstalk to date. There have been some seven-figure investments, particularly over the past 2 or 3 weeks while Beanstalk was blowing up in a good way before it blew up in a bad way. You know, in terms of how to attract VCs, particularly in the case of this fundraiser, feel like the structure that's being discussed is very attractive. And you know, we're excited about hopefully how much interest there will be. And with regards to the question around 3 days, well, the hope is to have this bidding process, which will be a week prior to the auction, such that you won't have a very, very short period of time.
Okay, understood. Then I wanted to know, with regards to the exit clause. Let's say if the parallel clause. I know that I don't know if you've answered this or somebody has answered the question. What is the exit clause? I mean, for the guys not to dump and their beans on us and what have you, and bring it down.
Let's say you have assets in the silo, and it's good to restate it anyways. If the amount of funds that are paid off in the new pod line, that will basically determine the amount of the haircut if you withdraw early. So if you wait to withdraw any of your assets from the silo until 100% of the new pod line from the barn raise is paid off, then we, in theory, with this plan, you would not forfeit any of your assets. But if you withdrew when only 1% of the new pod line had been paid off, then you'd forfeit 99% of your assets. Does that make sense?
Yeah, that makes sense. But I need to understand. Let's assume there's a VC that does come and gets attracted and buys the pods. He says, no, I'll give a check I'll buy the 76 million. Is there going to be a clause for him once it's paid off that he doesn't come to the market and dump that whole 76 million while
that doesn't matter. But in theory, under this auction model, Beanstalk is going to have a wide variety of participants in the pod line. And when pods harvest Beanstalk, it's very comfortable with people selling them on the market. So there's no reason for any sort of terms or things like that.
All right. Thank you. Thank you so much.
Thanks, Victor.
Yeah, of course.
All right. Bye.
Okay. We have one more question. We'll knock it over to Beansprout.
Hey, Dumpling. Just because we know Publius has to go here in a minute, I was wondering. I don't want to put Beanthoven here on the spot, but would it be possible to get a little bit of a live performance for everybody to kind of take us home here?
So it'd be amazing if he's near his guitar.
So before we head out, though, just want to say I know Beanstalk has been really hard at work putting together a lot of documentation to describe what the plan is and how it works and stuff. So that will hopefully be published in the not too distant future. So keep an eye out for all of that. And, we look forward to continuing the discussion tomorrow in the DAO meeting. And Mark, just want to say thank you so much for having us.
Well, thank you for inviting me. And most of all, thank you for your efforts. You guys are Jedi and you live by the lightsaber. And sometimes when you do that, you get your hand chopped off. But then after that, you go on and you blow up a Death Star. So here's to blowing up the Death Star.
Awesome.
Indeed. Well, we appreciate those
So
kind
good.
words, Mark. And, we and the rest of the Bean community are, we're all hard at work to try to get this thing back up and running. So talk soon, everybody.
Okay. Song. What do you have for us, Beanthoven?
Hey, everybody. Can y'all hear me okay?
Yeah, you sound great.
Great. Well, so for those of you who don't know me, I run audio for Beanstalk, and I'm also the resident Bean Bard. So got a little song just about the times that we've had lately, and hopefully we can drum up some support with this. Well, the farm was working wonders, the beans' future looking bright, with so many happy farmers getting richer overnight. Yeah, we were burning up the pod lines, we were minting to the nines, we were hooting and a-hollering and feeling mighty fine. When that exploit knocked us on our backs and they thought that we'd stay down, but the hat's back on the head and seeds already in the ground. Well, I be falling on some hard times, I ain't saying it ain't so. We've had ups and downs and then just ups up to several days ago. And that bean printer is quiet and I think that it's a sin. We gotta pick ourselves up and dust ourselves off and plug it right back in. Well, the silo's looking empty cause of some slimy hacker cuss, but the beans are only beans, the real riches lay in us. Cause it's the farm that makes the beans grow, and I think we all agree. We did it once in just 6 months, we can do it again in 3. So come down to the barn raise, we're working through the night. And when it's up, we'll raise our cup, and then it's back on with the fight. Cause our work is never over till the stocks all reach the moon. So come on down to the barn raising, and we'll all be laughing soon.
Wow.
All right.
That was incredible.
Thanks, everybody. Thank you for indulging that.
Did I hear we get a new one soon too?
Oh yeah, they're churning out. So as soon as I can write them and record them, you'll hear them.
That's awesome. All right, well, guys, this is really fun. I think this was maybe our best Twitter Spaces yet. So look forward to a lot more of them. And have a good night, everyone. Thanks for coming by.